Very good afternoon to all the members present physically and virtually across India for celebration of Capital Market Week. It is wonderful to have you all here on this day at Ahmedabad, Gujarat. Respected dignitaries on the dais, C.S. Kevur Bakshi sir, past president of the ICSI and chief guest of the today's program, C.S. Nagendra Rao sir, President of the ICSI and guest of honor of the program present, who is present virtually. C.S. Devendra Deshpande sir, Vice President of the ICSI and guest of honor of the program, who is present virtually. C.S. Chetan Patel sir, Council Member, the ICSI and Program Director. C.S. Rajesh Tarpara sir, Vice Chairman WIRC of the ICSI, and my colleague C.S. Vivek Vakharia, Secretary of Ahmedabad Chapter of WIRC of ICSI. I, Bhavya Gaudana, Chairman of Ahmedabad Chapter of WIRC of ICSI, welcomes all the esteemed members of ICSI who are present in person and virtually on the land of Mahatma Gandhi, Sardar Vallabhbhai Patel, and our beloved Prime Minister Sri Narendra Modi. We also recognize the presence of senior member of Ahmedabad, Sri Ashish Doshi sir, past council member, Sri Dilip Motwani sir, and thank you for coming in person in very short time. So I would now like to request C.S. Chetan Patel sir, council member of the ICSI, to welcome and do the honor of Sri Kevur Bakshi sir, our chief guest, by offering him Angvastra. Thank you, sir. Friends, Ahmedabad chapter is having legacy of providing good programs with low budget, and to bring it to the new height, we are organizing this program on hybrid mode. I am happy to share that Ahmedabad is the fastest growing city in India, and Honorable Home Minister and Member of Parliament Sri Amit Shah from Ahmedabad has recently announced to make Ahmedabad as fastest growing city of Asia. At the outset, let us congratulate Priya Malik, who won gold medal at World Wrestling Championship, and Mirabai Chanu, who won silver medal in weightlifting in Olympic of Tokyo recently. We hope many such medals will be presented to India by our sports person. Friends, I am happy to inform that Ahmedabad has also claimed to hold the Olympic in the year 2036, and preliminary groundwork is already started. We all know progress of any country is based on capital formation by the industry at large. If India has to become 5 trillion economy, investment by retail investor in capital market to feed the need of capital by industry is must. COVID-19, we have seen almost all IPOs are oversubscribed, and even number of demat accounts have increased manifold. Thus, there is a huge potentiality in coming years in capital markets. Capital market is a core area of company secretaries, and we must learn and relearn the game of the capital market. I am thankful to ICSI and including council members for organizing such a beautiful seminar for capacity building of the members. Thus, with such a huge growth, Gujarat will have huge investment, and corporate would be raising capital through capital market. There is a buzz that many companies are planning to enter into the capital market. Since President sir and council members and other across country are present, I would like to highlight that despite of COVID-19, Ahmedabad chapter organized more than 35 online and offline programs in last 6 months only. And presently we are organizing physical programs also with the strict COVID guidelines. And I am thankful to President sir to allow us from time to time. Even today we are adhering COVID-19 guidelines. So with this, now I would like to invite CS Rajesh Tarpara sir, Vice Chairman WIRC of ICSI, to speak few words with the member.
Good afternoon, friends. Thank you, Bhavya. Today's in celebration of Capital Market Week, we are organizing this conference on hybrid mode. I congratulate the team to organize this first time in the Ahmedabad in a hybrid mode, and I also thank to the President sir for allowing this. Respected Keyur Bakshi sir, Chief Guest of the program, Nagendra D. Rao, Vice President of ICSI, attending through webinar mode, web mode. Our President Sir, Nagendra Rao, and B. Narsimhan Sir, Chetan Patel, Vivek Vakharia, Ashish Bhai Doshi, and other senior member present here. Friends, we would be passing in the very tough time after Corona and COVID surge. Though the Corona has given us many bad effects in our life and in our economy, we have been badly affected due to this pandemic. But at the same time, we have given many opportunity and challenges to us as a human being and as a professionals. We have been compelled to use the technology in such a way that now we can even attend our meeting or webinar from sitting at home, sitting at office, or even while we are driving. So this is the advantages given by the Corona. In many other areas, we have been using this technology by NCLT hearing, High Court hearing, web series in televisions, all are gone in a different fashion, and which has ultimately saved the time of human being. In social functioning, social gathering, we were compelled to use at minimum resources, and ultimately it is a conservation of national resources. So in other words, we should also thank the pandemic like this to have this kind of the benefit, which technological benefit were already there, but we were not compelled, or even we have not thought of that to use in such fashionable way. And coming to the WARC and ICSI Ahmedabad chapter, as Bhavya has said, many activities has been organized looking to the Corona guidelines. At WARC level, we have also organized many many series of webinars, NCLT series, research summit, national quiz, regional level national quiz, and other many programs we have been organizing frequently. And our the then chairman Pawan Chandakji is quite active to organize this program. And one of the recent program which we have already announced and closed the registration is first Gujarat State Conference at the Somnath, being organized by 4 chapter, Rajkot, Surat, Ahmedabad and Baroda, under the aegis of WARC. And registration of this program has already been closed, and it is scheduled at 30th July and 31st July at the Somnath, where the president has already agreed to share the occasion in physical mode. So these are the initiative of ICSI WARC, and I again congratulate Team Ahmedabad for organizing this event in hybrid mode. Thank you.
Thanks a lot, sir. Your constant guidance always support us. Now I would like to invite CS Chetan Patel, sir, Council Member of the ICSI and Program Director. Chetan Patel.
Good afternoon, friends. I welcome all of you at this program. I welcome our chief guest, CS Keyur Bakshi ji, past president, the ICSI, a shoulder provided by Ahmedabad chapter to central leadership. He is always inspiring to all the young members and senior members of this region. I also welcome Supreme Leader of the ICSI, our beloved President Sri Nagendra Rao ji, who is participating and addressing virtually, our dynamic Vice President CS Devendra Deshpande, our Financial Services Committee Chairman B. Narsimhan sir, my colleague Regional Council Member Rajesh, Chapter Chairman Bhavya, Secretary of Ahmedabad, Vivek Vakharia, Senior Member Ashish Bhai, Dilip Bhai. I am very happy to be a part of this program. Friends, you know, capital market is always attracting investors. Growth engine is capital market for any economy. So every country is try to develop their capital market. In India also, as said by my colleague Bhavya, our Narendra Modi sir have a vision of 5 trillion economy. So how we can achieve? We need big capitals. So of course, our capital market must be highly developed. So government has taken a lot of initiatives, and our ICSI is always with government. We are also part of this government and supporting MCA and all the departments of the ministries. So we all know our own ICSI has a separate committee, namely Financial Services Committee, which every year conduct Capital Market Week, wherein we try to educate all the corporate professionals, investors, public at large, and create large awareness in mega programs. I am thankful to our beloved President Nagendra Raoji and Chairman Narasimhan sir also, because mostly this program is organized by the metro cities only. But this time he has also allowed to conduct program like Ahmedabad, Pune, Bangalore, wherein people are interested or always interested in capital markets. So I am sure this initiative will definitely support initiatives of the government as well. So at this juncture, I once again thanks to our ICICI leadership and congratulate to Ahmedabad chapter for conducting such a beautiful program for the benefit of the professionals of the Ahmedabad and Pan India who are attending virtually. So this juncture, I am restricting myself, and once again thanks everyone for patience hearing. Thank you.
Thank you, sir. Thank you for being our mentor and always support us as a guide. Friends, CS B. Narasimhan sir, council member, the ICSI and chairman of Financial Services Committee, would like to join virtually. However, due to his flight rescheduling, he could not join with us. But we are really thankful to him for providing opportunity to conduct this mega event at to Ahmedabad chapter. So now I would like to invite CS Devendra Deshpande sir, Vice President of the ICSI and guest of honor of the program, present virtually. Devendra Deshpande sir. Okay. So now I would like to invite CS Nagendra Rao sir, President of the ICSI and guest of honor of the program, present virtually. President sir.
Good afternoon. Am I audible?
Yes sir.
Okay. Good afternoon. CS Keur Bakshi, past president of ICSI. CS Chetan Patel, council member, ICSI. CS Rajesh Tarpara, vice chairman of WIRC. CS Bhavya Vodana, chairman of the Ahmedabad chapter. CS Vivek Vakharia, secretary of the Ahmedabad chapter. And all the esteemed members present over here. Well, through webinar mode, I am not in a position to know who are sitting in front of the August dais present. So I presume that all the past Central Council member or the past office bearers, all of them would be present. So very, very good afternoon to each and every one of you. At the outset, let me congratulate CS Bhavya, the chairman of the Ahmedabad chapter, for organizing and having the courage to organize the program, the Capital Week, the celebration of the Capital Market Week on a hybrid platform, both physically as well as virtually. I am sure that Mr. Bhavya would have taken all care and caution in order to ensure the strict compliance of all the social distancing norms and all those norms which has been prescribed by the Ministry of the Home Affairs. Similarly, I also welcome and also would like to compliment Bhavya for inviting CS Keur Bakshiji. Long time that we have heard from him, and he has always been inspirational. Because I was a student, I still remember when he had come to Bangalore, and he was a vice president or president, I don't recall now, president then. And always he used to inspire and motivate us as a student to do lot more for the institute. And to be present amongst him, maybe on a virtual mode, I feel it's a proud privilege so far as I'm concerned. I also take this opportunity in welcoming Keyur Bakshi, because we also have great, I mean to say that we treat him as a mentor for many of the Bangaloreans from the south, because his vision, when he was a president at that time, we could, I mean to say, he was always uh, lage raho, karna hai, aage badhna hai. The way in which he used to inspire us as a student at that particular point of time, I don't think so that ever before those kind of words would have come from the past presidents. I also wish to congratulate the entire managing committee team for organizing this particular program. As known to you all, that the topic, the theme, envisioning the next phase of capital market, and especially what best than Ahmedabad or Rajkot or Surat, where you will find many of the investors, and you will find many of them would be more and more interested in this particular topic of what would be the next phase, how we as a company secretary can venture into a new role of capital market. New concept of social stock exchange is being discussed, and will be in place. And new mechanism of using the tapping the capital market is being felt of. All of you are known, despite COVID pandemic, you will find many of the companies have used the facility of the capital market tapping. One such is, recently you have seen Zomato. Similarly, Paytm is in line, and many other companies in line. So how company secretary, whether in employment or practice, and more so company secretary will have more and more opportunities. Similarly, you will find at SEBI more and more opportunities, more and more recognition. Recently, again, two recognitions have been given, and one more recognition is already approved by the PMAC committee, and it is shortly going to become once the official gazette notification will be issued. So, in that direction, I am sure that many more programs will be organized by the Ahmedabad chapter in particular, for the development of the profession, not only for the members but also for the students. Speaking on a webinar mode, and all of the members who are present in physical, I know that most of us would be more eagerly awaiting to hear Keyur Bakshi ji. So I would not like to speak more. I would only like to say that institute is always there for the members and the students. Let us connect ourselves in a more bigger and a better way. Thank you once again for inviting me, and I hope that this program will be a mega success. Thank you. Thank you, Bhavya.
Thank you, sir. Under your humble personality and able leadership, we can do so many activities from the chapter level. We are awaiting to welcome you in person at Ahmedabad in upcoming seminars. So friends, today we have CS Keyur Bakshi sir, past president of the ICSI, as a chief guest of the program. Before inviting him, let me give brief introduction of Sri Keyur Bakshi sir. He is a past president of the ICSI for the year 2008, and vice president of the ICSI during the year 2003 and 2007. Sir is a fellow member of the Institute ICSI, and over 40 years of rich experience in the areas of corporate laws, finance and management. My area of expertise is corporate governance, corporate and security compliance management, secretary audits, due diligence, mergers, acquisition and takeovers, SEBI, LODR and appellate tribunal. Sir has served as a visiting faculty for MBA programs, addressed professional gathering at various seminar and conferences in India and abroad, contributed articles in the areas of professional interest in the Professional Journal and Business newspaper. Sir is a past president. Sir was a past president of the International Federation of Company Secretaries and a past member of Secretarial Standard Board of the ICSI. Sir is a former member of the National Advisory Committee on Accounting Standard of the Government of India, and he is a former member of the Corporate Law Committee of the Gujarat Chamber of Commerce and Industry. Presently, he is a director of Gokul Agro Resources Limited, Infibeam Incorporation Limited, Innovation Tires and Tubes Limited, and Kiri Industries Limited. And sir was a past director of Tudor India Limited, subsidiary of Exide Corporation USA, Quant Capital Limited, subsidiary of Reliance Capital Limited, and ASC Capital Markets Limited, subsidiary of Ahmedabad Stock Exchange Limited. So we are honored to have you, sir, today, and now I would like to request you to share your words of wisdom with us.
Shri Nagendra Rao, Honorable President of the Institute, Devendra Deshpande, I am not sure whether he has joined, the Vice President of the Institute, Mr. Chetan Patel, Member of the Council of the ICSI, Rajesh Tarpara, Vice Chairman of the WRC of the Institute, Bhavya, Vivek, guests setting up the dais including Mr. Ashish Doshi, the past council member of the ICSI, and my dear friend, ladies and gentlemen. I thought I will have 10 minutes to speak, but unfortunately there are dropouts, and those who spoke also restricted themselves, and therefore I will have to speak little longer. In an inaugural session, you don't speak much on technical aspects, but at the same time, I will try to spend some time to ensure that, the faculties for technical session 1 arrive and take over. Friends, the topic is envisioning the next phase of capital markets. Where are we heading to? What will be the capital markets in future? What will be the role of the company secretary? What will be his contribution? All these things are going to be debated during this seminar. But before we really talk about the next phase or envision the next phase, it is important to know the history. Capital markets in India has a long history of 1.5 centuries. Bombay Stock Exchange was established in 1875, and prior to the establishment of Bombay Stock Exchange, informally, traders were trading. So it's a long history. Friends, when I started my career as a company secretary, or even before that, when I was a student, capital market was there. Bombay Stock Exchange was existing. There were listed companies. People were investing into shares of various companies, but that number was very, very small. Let me tell you. There were hardly 500 or so listed companies. And those who were trading in shares, or those who were share brokers, were not accepted well in society. People thought that he is a gambler. Parents were not able to find a good match for such persons. That was the time. I am talking about at least 45 years back. So what happened, as we are talking about the history of capital markets, what really happened which brought many participants, many investors, many shareholders to come to the market? According to me, there are 3 major developments. First is during 1984, we tell it FERA dilution. Foreign Exchange Regulation Act, the then Foreign Exchange Regulation Act, mandated that all multinational companies or foreign companies operating in India through an Indian company must restrict their shareholding to 40%. They cannot hold more than 40% shares in an Indian company. But effectively, they were holding much more. 70, 75, 80% shareholding was held by the foreign holding company. So therefore, that 75 or 80% holding was to be brought down to 40% within a period of about 1 year. And interestingly, there was no free pricing as we have now. The regulator was the controller of capital issues under the Ministry of Finance sitting at New Delhi. And CCI we used to call. CCI had the guidelines on pricing of the share. Pricing of the share was fixed based on past 3 years' profits. So what is your average profit during last 3 years? And then that was to be capitalized at the present rate of interest. In those days, 12% interest. So therefore, the price of the share to be offered to public was much, much lesser than the quoted price. For example, SKF Limited, the makers of Iodex. The price quoted was rupees 160, and that share was offered at rupees 38. Large number of companies, all multinationals, came within that span of 1 year during 84, 85, where people realized that there is a big money and there is a quick money into this market. And that prompted many, many participants, many, many members of public to come to the market. First, they came to primary market, and then they understood they had a knack of investing and gaining. So therefore, first big shot was FERA dilution during 84. Second major development came during 1991-92. We call it Harshad Mehta's boom, where, of course, it was led by the secondary market boom, but ultimately was converted into a great primary market boom. My senior friends sitting here like Dilip Bhai or Harish Bhai will remember that every month there used to be 95 or 100 public issues. Within a single day, 8 to 10 issues will open all over India. And large number of public issues. Company secretaries were also very happy because he would be advising on 2 or 3 public issues at any given point of time. So large number of public issues came. Large number of people participated into public issues and gained. Thereafter, during 2000-2001, what we call as dot-com companies boom, IT companies, where people thought that, with a low valuation, with a very, very low valuation initially, these companies were going to be very big, returns will be very high, and therefore 2001 also brought in large number of participants. Today we see IPOs opening, getting oversubscribed by large number of oversubscription, large number of applications. All these things have seen about 20-25 years that people have started coming in. So that is the history. And today's capital market, SEBI came into existence during 1992. SEBI came as a regulator. Initially, there were no powers as SEBI had wanted, but gradually SEBI got all the power that it wanted. And today, I can say that we are a well-regulated market. We are definitely a well-regulated market, and SEBI is doing wonderfully well to ensure that surplus promoters or fly-by-night of operators do not cheat people. So that is the advantage of having a regulator. Now, with this background, let me tell you that when we talk about envisioning the next phase, how does it affect the company secretary? Because our focus should be on company secretaries, that what will be the position of a company secretary in the new era, in future, and what will be his role, what exactly is expected of a company secretary. So friends, let me tell you that first, the company secretary is a compliance man. All of you are aware, he is a compliance person. He or she will ensure that the company complies all applicable provisions of various acts, including the Companies Act or securities laws. Now, how is this important? What is the expected market size 5 trillion economy earlier speakers were mentioning, if you want to be a 5 trillion economy, the number of listed companies should multiply by at least 5 to 6 times than they are today. In Australia, compared to the population, the number of listed companies is such that we should have 1 million listed company in India, if that proportion is to be maintained. But we cannot have that kind of a listing in future, but at least there must be a big inflow of companies who seek listing and who are listed. Now, in order to ensure that these companies are listed and they continue to perform well, the most important aspect is the governance, the corporate governance. And it is the company secretary who is supposed to ensure good governance. I have seen many company secretaries who are good at compliance, form filing, getting some approval. They are very good at it. But what is effectively good governance? Hardly a few company secretaries focus on this. So my advice to all company secretaries, to ensure that companies are governed well and there is a good governance. In order to ensure good governance, company secretary has to rise beyond his present role of an implementer or a mere complier. He is an advisor to the board, and therefore he has to advise the companies as to how do we govern, what should be disclosed, how transparent should we be. All these things are to be advised by a company secretary, and if he does that, not only his role will enhance, get escalated in the organization, but the listed company will also perform well on the stock market. So that is one, that company secretaries must ensure good governance. And second role, that beyond compliance is that how are you able to bring large number of companies for getting listed? You have to play a role of a counselor. You have to advise unlisted companies as to what are the advantages of the listing. How should you get listed? And also ensure that fly-by-night of operators do not come in or jump in and steal the show. So you need to advise what are the advantages, how do you get listed, and you must get listed. So therefore, rather than finding a job into a listed company, I am meeting many company secretaries, youngsters. They come to me, sir, is there any vacancy? I would say, let me try. And if I am able to direct him to a company which is unlisted, he will say, sir, listed company nahi hai. So rather than finding a listed company to get a job in a company which is not listed and ensure that it becomes listed. That is your role. That let us see that company is performing, and if the company is performing, we motivate the promoters to get it listed. And then your role to advise on the governance, to advise on various aspects of, I would tell you, the nitty-gritties of how share prices are constantly getting rising and rising, right? Now, I have also seen most of the company secretaries who are expert on company law compliances. Most of you are very well aware and doing extremely well as far as Ministry of Corporate Affairs form filing is concerned. But there are very few who are expert on SEBI Act and various SEBI regulations. First is ICDR, Issue of Capital and Disclosure Requirements. ICDR prescribes the methodology for IPOs, rights issues, bonus shares, preferential allotments. What are those guidelines? You should have remembered all this, and you should be able to advise on any of them at any point of time without referring to the books. So ICDR is one. After the company is listed, it is LODR, listing obligation and disclosure requirement. That also you should learn by heart, that what are the provision in LODR? What is it that the company is required to disclose? When? How? All these things you must read and get expert onto this. Insider trading, most important, and there are many companies and many promoters who are penalized, who are prosecuted for violation of insider trading regulations. So therefore, it is for a company secretary to ensure that there is no insider trading. If at all there is a probability or scope for an insider trading, leakages should be stopped, and he should have a system in the company whereby he knows that who all are trading, who are the relatives of directors or key manager personnel who are trading into these shares, and he must stop insider trading. And that is very important because public is cheated. Those who are having inside information gain maximum amount, whereas poor people get nothing out of it. That is one. SEBI CEST regulations, substantial acquisition of shares and takeovers. These are also important regulations. Various disclosures are required to be made from time to time. And if you increase the threshold, then there is a problem. You are required to make an open offer, public offer, and all these things are going to be difficult for the promoters of the company. So your role in advising the companies to ensure that there is no violation of SEBI Act or various SEBI regulations which are applicable from time to time. Mergers and acquisitions. Today, there are large number of listed companies against which insolvency is filed before the NCLT. In fact, there are members, in fact, I am also advising a few companies that I am encouraging the resolution applicants to bid for that company. So what happens that you get a good company at a good price. You can acquire a company at a good price. At the same time, you can seek automatic listing. All your past dues for non-compliance with the stock exchanges, penalties and all will be not payable if the resolution plan permits so. So therefore, you get a listed company acquired and ultimately that company prospers. Again, merger and acquisition. There are a large number of defunct listed companies, a very huge number of companies which are listed but defunct. Many of them trading is suspended. Many of them are on the verge of delisting. In fact, stock exchanges have delisted a large number of companies, but still there is a large number of listed companies which are defunct. If a bank becomes sick, Reserve Bank of India, which is the regulator, mandates a strong bank to acquire the weak bank. Unfortunately, here in India, the stock exchanges and SEBI, they are not encouraging such takeover of defunct or sick listed companies. I suggest to SEBI that if the norms or the laws are liberal, then shareholders who have lost, who have no hope of getting anything out of these companies, can be revived. Someone else will amalgamate his company with such companies and seek listing, and the shareholders' value, which has become zero, there can be some valuation which shareholders will be able to earn. So these are the advices to a company, to my dear company secretaries friends, that they must come forward, participate in such a manner that there is a large number of listed companies in India. You are all advising all these listed company in your capacity as not only as compliance officer, but guide to the boards that how do these companies govern, how they govern, ensure proper compliances, motivate more and more companies to go public, and ultimately, once this happens, naturally large number of company secretaries will be finding lots of opportunities out of these capital markets. Now, there are two technical sessions and experts are there. Technical session 1, Yamal Vyas and Umesh Ved, they are here and they will talk to you about opportunities in capital markets. And then there is technical session 2, where experts will be talking on LODR regulations. I will not take much time. In the end, I congratulate the Institute, the President, Mr. Nagendra Rao, and Ahmedabad chapter, Mr. Bhavya Godana, to have organized such a good program, which is the need of the hour. And I wish the program a grand success. I am sure members who are participating in this program will immensely gain out of these deliberations at the program. Thank you very much. Thank you for inviting me.
Thank you so much, sir, for sharing your valuable time and accepting our invitation in a very short time. Friends, India has potential to growth being youngest youth of world. Hence, if we want to make 5 trillion economy, we must grow with GDP of 7% every year. This growth is impossible without the strong capital market. However, in order to control scrupulous kind of promoters, we need to develop robust mechanism, governance, and reporting system. Thus, this seminar will go in a long way to build India as the fastest growing country economy to achieve dream of our beloved PM Shri Narendra Modi. With this, I would like to invite CS Vivek Vakharia, Secretary of Ahmedabad chapter, to proceed to conclude this session.
Thank you, Bhavya. Before conclusion of the seminar, I would like request to CS Bhavya Godana, Chairman, to come forward to give Shahid Ki Beti certificate to Sri Keyur Bakshi sir, Chief Guest of the Day. Thank you. Now, good afternoon all, and good afternoon to our honorable chief guest and our past president Sri Keyur Bakshi sir, our guest of honor and our president sir Sri Nagendra Rao sir, and our guest of honor and vice president Sri Devendra Deshpande sir, our branch chairman Sri Bhavya Godana, our past chairman Umesh sir, Ashish sir, Tejas Shukla sir, and all our dignitaries, speakers, and all my dear professionals who are present in persons and or through virtual window. A very warm good afternoon to all of you. It has been our endeavor to at Ahmedabad branch ICSI to keep a Gyan Yagna, flame of knowledge burning even during these days that we are living for in the last few months. So this is our first event where we are migrated from the digital through the hybrid mode. Our efforts create energy from you all, and with all active participation and a great motivation from our leadership and also from the seniors who inspire us a lot. It is my privilege and honor to present our gratitude to the personalities like Sri Rao sir and Sri Deshpande sir. On behalf of our branch, we at ICSI Ahmedabad are really humbled that you have spread your invaluable time to share your afternoon with us, sir. Thank you very much to all for your support, guidance, and presence. We cannot thank enough with our words, no matter how much I use them. But in the virtual times, this is all we can do. So we remain grateful, sirs, and will definitely await your personal presence as situation will recover, sir. I do not intend to take much time, and let us quickly go to our distinguished speakers and panel to listen with their wisdom and knowledge. Thank you all. Thank you so much.
મારી બી પેલા યશની મારી બી રાખી દો પેલી બહુ યશ નથી પેલી મારી અહીંયા રાખી. Audible? Friends, growth of capital market is based on the awareness of the citizen of the country. India is having potential opportunities to grow the capital market. Capital markets help to channelize surplus fund into productive use and connect savers and entrepreneur borrowers. However, as an investor, what should we do and what should we do not do to invest in the capital market is to be kept in the mind. And therefore, today we have arranged special session to discuss on do's and don'ts for investor and growth and opportunity in capital market. And we have invited CS Yamal Vyas sir, past council member, government nominee, as well as BJP spokesperson, and CS Umesh Ved sir, past council member of the ICSI. So now I would like to request CS Yash Mehta, Managing Committee member, to offer Angvastra to CS Yamal Vyas sir. I would also like to request CS Vivek Vakharia, Secretary of Ahmedabad Chapter, to offer Angvastra to CS Umesh Ved sir. Thank you, sir. Before proceed for the session, let me give brief introduction of our today's faculty. Yamal Vyas sir is a chartered accountant and company secretary, ex-editor of Dalal Street Journal magazine Bombay, and currently he is a chief spokesperson of Gujarat BJP. He is a full-time member of 3rd Gujarat State Finance Commission between 2011 to 2015. He is a former government nominee on the Central Council of the ICSI for the year 2004 and again 2015 to 2019. Sir is the chairman of Ahmedabad branch of ICAI during the year 2008-9, and he is the president of CA Association Ahmedabad in the year 2015-16. We are honored to have you, sir. We have invited CS Umesh Ved, sir, who is a practicing company secretary from the Ahmedabad and having post-qualification experience of more than 2 decades. Mr. Ved, sir, a fellow member of the ICSI, is also a graduate in law. He is a proprietor of Umesh Ved and Associates, a leading practicing company secretaries firm of Western India, specializing in mergers, amalgamations, takeover, restructuring of companies, IBC security laws, and foreign exchange management, etc. Sir is an active member of the ICSI and was a member of the Central Council of the ICSI for the year 2011 to 2014. He was also the chairman of Ahmedabad chapter of WIRC of ICSI in the year 2000 and chairman of WIRC of the ICSI in the year 2008. He is a regular speaker at seminars, workshops organized by the professional bodies and visiting faculty at professional institutes repute. Widely travel, Shri Umesh Ved sir is a avid reader, prolific writer, and has contributed several papers and articles in prestigious professional journals, magazines, and leading financial dailies. So we are really honored to have both of you, sir, and thank you for accepting our invitation in a very short time. So now I would like to request both the seniors to take over the session.
Thank you, Bhavya. He is the second generation Gaudana I know. Uh, it's always a pleasure to be in any function of ICSI, and unfortunately for the last 2 years, because of COVID, we have not been able to meet often, and this is a very welcome development that ICSI has now organized a hybrid kind of program where we take the advantage of both personal presence of members as well as the online facilities which are now freely available across the country. So I am in this hall. Usually we can reach out to a few hundred people, but now standing here on the same dais, now I'm sure I will be reaching out to hundreds and hundreds, maybe more than 1,000. So that's the advantage of technology. And the subject that I am going to talk on, envisioning the next phase of capital market, is an apt subject because I have seen at least 3 phases, and we are on the verge of seeing the 4th phase of the capital market. I have been in the capital market for almost 4 decades, from 1984. So I have seen a lot of changes in the market. So I'll briefly go through how the market has evolved for the young members who probably may not have an idea of how the market used to operate earlier. During the 1980s, when the market started growing, at that time there was no Nifty, there was only Sensex, and which was hovering around 100, 150, 200. And I remember that it reached a peak of 664 in 1986, which it found very difficult to cross again for the next 3 years. It crossed in 1989. So, I mean, those were the numbers. Now we have 53,000 plus. So, and the market, of course, was very small then. It was controlled by a very few people. Being a broker of Mumbai Stock Exchange, the Bombay as it was called then, was a huge privilege. It was a very expensive proposition to become a member of BSE, and whoever was a member of BSE could you could presume that he would be a multimillionaire. Those were the kind of cloud that BSE members enjoyed the 1980s and half of 1990s. During that time, it was all open cry system of trading, where brokers and the representatives congregated in a hall, uh, and for 2 hours the market used to operate from 12 noon to 2 p.m. So for 2 hours they used to deal physically on in listed shares, and there was a huge shouting and all, which we have seen. Probably a lot of you must have seen that for the first time in the serial of Harshad Mehta last year. But those were actually the kind of scenes which were taking place every day. So from there, which that system, which was pretty primitive now that if we can look back, but it was very efficient also at that point in time. And normally settlements used to take after 15 days, where we have daily settlements now. There used to be 2-week settlements. So there was a lot of risk involved for the brokers and the investors. And we used to see a lot of failures of brokers, which was there were a lot of defaults. Investors lost a lot of money, and there was no provision like now we have of investor protection fund and all. There was nothing like that. And whoever was the unfortunate investor whose broker defaulted, he had to bear the loss. So those were the days, and right from there, the first phase, I think, if we can say, lasted up to 1992, 93, when this Harshad Mehta scam broke, and the market, because of Harshad Mehta, it grew very fast, and because it ran very fast, it tripped, and then there were a lot of operational problems, default problems, and there was arrests and all, which was a very unheard of thing in the stock market till then. So between 92 and 96, the market fluctuated in a transition phase, I would say, and the second phase started from 1997-98, when NSE became active, the online trading started, and we switched over to computerized trading, which was a major development, major change, because very few countries in the world had this kind of facilities at that point in time also. So India was always advanced in stock trading that way, of stock market operations. And after that, late 90s, we had Demat also, and that brought about a major change in the market. So the second phase of the market, if we can say, was switch over to electronic trading, and then Demat. Because prior to Demat, when physical transfer of shares used to take place, there were a lot of problems, I mean innumerable problems. You cannot imagine the kind of problems that people had, because getting shares transferred in your own name after buying was a major exercise, and very few people were very fortunate to get the state shares transferred to them straight. The registrars were also burdened with a lot of work, a lot of problems with signatures, with the validity of the transfer forms, and the law also was very, very impractical, I would say now. So at that point in time, with the introduction of electronic trading and with the introduction of Demat shares, things have changed for the better, and things have changed for permanently. And that was the phase where India could move on to the global level. We matched steps with the world from then onwards. And the second phase was up to, say, I would say 2003-04, and after 2004 there was a huge global boom, mainly led by commodity prices, and there was a lot of interest in the stock market. New investors started coming in, new IPOs came, a lot of companies got listed, PSU shares got listed in a big way. And between 2003 and 2008, there was extraordinarily high interest in the capital market among all countries, and India was no exception. India had a large number of people joining, and the index also moved up about 3 times, which seems very difficult to believe, but that 300% rise took place in the index during that period, and a lot of people made a lot of money. 2008, there was a crash because of Lehman Brothers going down under the problem with the housing finance companies in the US, and which also, now that India was not decoupled, India is now a part of the global business system. So because of the problems in US, Indian market also suffered, and there was a lot of uh, upheavals in the market during 2008 to 2010, and there I think the up to 2012 there was a different kind of market where there was a transition. The Indian economy was growing and lot of new capacities were coming up, but with it there were also a lot of problems being created for the banks who were financing those increased capacities. So if we can say that that phase ended about then for a while, and after change of government in 2014, a lot of things started coming out, and there were issues with banks, and banks had a huge amount of bad debts. A lot of promoters were on the run, and we all know how those whole thing panned out. It's still coming out, and banks are still, PSU banks are suffering a lot. Private banks have, in contrast, done well, but that's okay. That's another story. Point is that the market is now entering the fourth phase now, if I may say so, because uh, for the first time, and when I'm saying now it's this week, because for the first time, uh, online company which is basically an online presence has got listed, Zomato, and that is the first company. Prior to that, we had Naukri.com, InfoEdge, but then it was a different kind of a business, and it was also a holding company for many other investments, and also it's a different company. This company has created history. It has made a huge IPO. It got a tremendous amount of response from the people, individuals, investors, the institutional investors, and foreigners also. And it got listed at a market cap of 100,000 crores, which is unique for a company which has no physical presence, no products to sell. And this has now, I think this is opening the doors wide for a lot of other technology companies to get listed on the market, and this will, this is a phase where everyone of us needs to think, the regulator needs to apply their minds and see how the whole thing should be controlled, because during the early 2000s, the market, the SEBI decided that the companies can price their issues freely. The IPOs are now priced at whatever the company decides. The rights issues are made at whatever price the company decides. They just have to inform SEBI. So in that scenario, when the first phase of good technology companies which are already established, which have a big name, which have good potential for high profits, if they get listed, and after that there is bound to be a flood of other fly-by-night operators, which has always happened in the past when there was a boom in a particular sector. That we can discuss, and I think we'll discuss with Umesh Bhai later. So I think this is the phase where regulator needs to be very, very careful how this technology companies get listed, at what price they get listed, how the individual investors are protected, because now the market is booming, everyone is happy. There could be a time when the companies make IPOs at very high prices, and then the investors, especially the 10-15% local retail investors, could get hurt in a big way. It's a good thing that there are a lot of safety measures already in place, because you can't lose more than 15,000 rupees at a time. That's one. Most of the investors, I think, retail investors apply only for the 15,000 rupees sum, which is not the case, which was not the case earlier. Those who, the HNIs and the institutions who invest, they know, they should know, and they are better informed. So the regulator need not look into their interest so much, except that the companies do not cheat the investors. That is the first priority. That should be the first priority of the regulator, and I'm sure they are doing it that very well. Now, the point is that today, when we have Zomato getting listed at a market cap of 1 lakh crore rupees, and at least 10 more companies lined up who have lined up their issues, and every IPO of smaller companies, which in fact, I was this morning reading about a company, and the name I don't remember, but that company, a technology company, has got a SEBI permission to come out with an IPO of 1400 crores. Now, 1400 crores is a big amount even today. And a company which, if I don't know, I can say, I mean, when I have been fully involved in the capital market for the last so many years, day in and day out, if I don't know the name of that company, there's something which I get alarmed. And if it is allowed 1400 crores worth of IPO by SEBI, then I'm sure that there may be a few other companies which are very well known and who are already in the process of getting SEBI permission. I'm sure they'll get a good response also, and they'll be able to grow. The investors will be getting an exit, so that those investors can invest in more startups. I'm sure this whole chain is a very positive kind of movement, which can bring in lot of money, lot of investment in Indian companies. And India, based on this, I'm sure that Indian economy, as Bhavya mentioned in earlier, we are on the verge of starting our sprint now to the 5 trillion economy. And that 5 trillion economy now, from say approximately we are 2.8 trillion now. And that race to 5 trillion, 24 is the target the PM has put up for before us. And I will not be surprised if we reach there by that time, because with the kind of interest that foreign investors, institutional investors are putting in the Indian startups and Indian technology companies, I'm sure that there is so much money abroad which is lying to be invested. And if India is able to regulate our companies better, if we are able to give them a good return and in a very transparent manner, I'm sure that whatever the amount of money people want, the entrepreneurs want for their growth is available worldwide, and India is going to be a favored destination if we are able to manage this phase, earlier part of the phase, very properly. Because once, if a scam comes out, or if there is a cheating with the investors by some company, then foreign investors get worried, and then we have to pass through a very, very long process to get them interested again. So my only apprehension is that the regulator has to take care of that, and I'm sure that SEBI is well equipped, RBI is well equipped, and with the kind of controls that are there, which are less governance and less government and more governance. So I'm sure that this will happen and growth will come very fast. And I'll not be surprised if our movement towards the 5 trillion economy is faster than we would like to imagine today. Yes, we had a lot of problems because of COVID. COVID has hurt the growth of many companies, but still the initial results which have come out for the June quarter also indicate a very positive development, because the large companies which should have suffered a lot, because during April, May, June, for most of these 90 days, the large markets like Maharashtra, Kerala, Karnataka, they were more or less closed. There were a lot of restrictions and lockdowns, but still the turnovers have not fallen. The profits have more or less been stable, or have fallen only marginally. And this only shows the resilience of the Indian corporate sector. If you look at I'm sure there must be many analysts among the people who are listening to this, and I'm sure they must have gone through this exercise. If you look at the 5-quarter results, April to June 2020 onwards up to June 2021, these 5-quarter results will show that Indian promoters and Indian entrepreneurs are extremely resourceful, and they are able to manage whatever situation they are in to their advantage, because over the period all sorts of costs have gone down. you see operating cost, the HR costs, the whatever cost you mention, including interest, everything has gone down. They have managed with less money, they have managed with less debt, and they have still grown. They have still maintained their growth, they have maintained their positions. So, by and large, the Indian entrepreneurs and Indian stock market has been very resilient, and I am sure that that also is going to help when the situation improves, because now ideally there should be no third wave, and if that happens, and if vaccination takes place fast, then probably we will be out of COVID by end of this year, and that should pave the way for a very, very rapid growth of the market and also of the economy. Both go together now, of course. So that's the initial comments I would make. Umesh bhai, would you like to make your initial comments and then we'll discuss? Okay, so now when we talk of the next phase of the market, one thing I mentioned was, which is very, very important in my view, is regulating the growth. Because whenever there is rapid growth, there are problems. We have seen in the past also, we have seen in all sectors. When the banking sector grew very fast during the early 2010, 11, 12, 13, those years, the banks were growing at a scorching pace. And in the end, by 2013-14, we found out that banks were lending money to people who were not able to repay, or they were, right from the beginning, the banks knew most of these people were not going to repay, but still there was huge lending and the banks were showing good results. Now this kind of growth, whenever it takes place, that always leads to a lot of regulatory issues and a lot of irregularities. So those irregularities need to be curtailed and controlled very quickly and earlier than later. And that is something which should worry all of us, because in the past, it has sometimes happened that the regulator wakes up a little late after the horses has bolted, like they say. But still, I would say that both the financial sector regulators, I am not aware of the insurance part, because that's not my area of expertise, but both RBI and SEBI have been doing remarkably well, regulating their respective domains, and I'm sure that we will be able to manage with a lot of growth. And the government also is very, very conscious, as I read in today's paper, that the Honorable Finance Minister has said that the government will just not print notes to increase liquidity in the market. Now, everyone had been saying that increased liquidity should help. That is, to some extent, some economists are right, but then there is always this problem of inflation. And that the next phase of the capital market, I think, is also growth in the capital market is going to be determined by how we are able to control our inflation. In inflation, the prices go up, stock prices also go up. The interest of investors is taken care of in that sense, that their portfolio value normally goes up because the profits go up. All companies, whatever services or goods they are selling, they get better prices because of inflation. The costs also go up. So many companies, mostly the market leaders, they are able to control their costs better. They are able to show more profits in inflation. That has been the historical fact. So during inflation, if there is a now the inflation is ranging at between 4 and 6%, which is the range RBI wants it to remain. If it doesn't cross 6%, then we are in a very comfortable zone as an economy, and I'm sure that we'll have this kind of range of inflation, and once the petroleum prices come under control, we'll have very low inflation after the kharif crop comes in the market by around Dussehra. The food prices will also go down. They are not very high even now, but they should go down even further. So all this indicates that the inflation is a worry, but the macroeconomic factors as they appear today seem to be very positive in that sense. And because of inflation, this kind of inflation, it also means that the people tend to get borrow more. I mean, that is again a historical fact. Because if I say I want to buy a refrigerator, and if I am getting a loan today, I'll buy it on installments, and because when I pay installments, my income is going to increase because of inflation. So effectively, I'll be paying less. During inflation, all borrowers are benefited because they get the income levels rise with the rise in prices. So they feel comfortable. Everyone is happy. The lender is happy because he gets the money back. The borrower is happy because he is getting his income is growing, so he can pay those installments. And so inflation in the short run is very good for every one of us. Once it goes out of hand, then the government has a problem. Now in a country like India, why it cannot go very out of control? I'll give you an example. Anything that is available in this country sells. And on the other hand, if you have a demand for anything, you will get it. So for example, I remember some 20 years back, uh, Ahmedabad did not have um, uh, watermelons available. If you wanted watermelons, you had to go to Kheda and get from there. So that was the situation. And today you will see that every summer before COVID, every summer the person who is selling watermelons near my house, every day one truck used to come, 10 tons of watermelons. One person used to sell near Sardar Patel Stadium. So that is the kind of demand that has generated because of supply. So if there is a supply in this country, this is a very unique country. Whatever is available will sell. So here that is one, when the economy grows, the supply of goods is crucial. Now there is a demand. So the demand without inflation also there is a demand. When inflation, because of inflation, the demand will grow up. Now where is the supply coming from? Again, now where are the watermelons coming from? Some are coming from Karnataka, some are coming from Maharashtra. So if there is a demand, supply will emerge. The inflation creates a problem in countries like US, where it's a very well organized market. Everyone knows where, who is producing what is available where. So when there is inflation and there is a better demand, a higher demand, everyone knows that these goods are not available anywhere. They can import. There is a time lag and there is a cost involved, because when there is a huge demand, the exporting country will also charge higher prices. In India, we don't have that problem because most of the things are produced in-house, in the country. Imported goods are already there, and their extent of imports is only going down, primarily because of COVID and China. A lot of imports of consumer goods have fallen in the last 1 year, 1.5 years. So that way also it has been a blessing in disguise. Now whatever we want is mostly produced within the country, the consumer goods I am talking of, consumers and consumer durables. So in that case, if there is inflation, there is a more demand, then there is going to be more supply from the country only. Within the country, we have all the resources, we have the raw materials, we have entrepreneurs, we have suppliers, we have people who will go and sell. So India, because of its unique nature, because of our geography, because of our demography, because of our manpower quality, we have a distinct advantage where inflation will never go out of hand. So if we are worried about inflation, I don't think that is the normal economic rules will apply here in India. In that case, the next phase of the market, the growth is going to come from within the country, the demand from within the country only. And in addition, we have another opportunity window which is open since the last few months, and that is PLI, productivity linked incentives, that the government has come up with about 2 lakh crores worth of incentives, if I am not mistaken, maybe it is more. Now those 2 lakh crores will be given to those companies which will manufacture more than last year, in the previous period, and they will get cash incentives straight. And this has helped get a lot of investments in telecom and in pharmaceuticals. These are the two major sectors where a lot of investments have come in. Foreign companies are now, a lot of Apple sells 2 crore Indian phones in India every year. Now out of those 2 crores, maybe 10-15% are already being manufactured here. And the potential is to not only to reach 2 crores, maybe they can export from here. Because now two major suppliers to Apple are setting up huge factories near Bangalore. So it's going to be I mean, that Apple is one example. Samsung has done that. Lot of telecom companies have come in. Electronic goods are being manufactured in a big way. More investments are coming in. Similarly, we have pharmaceutical companies investing a lot of amount for under the PLI scheme. They have only from Gujarat, if I am not mistaken, there are more than 40 applications of pharmaceutical companies for PLI. And similarly, now the government has announced including steel in PLI. So steel also there is going to be a huge improvement in capacities, and that will probably cool down the prices also. Steel prices have gone up very high. Everyone is worried about how the steel prices will move, and that is because it's a major raw material for everyone. So all these will get sorted out in a few months, because of PLI, a lot of new capacities will come up and production will be more. So all this, when you are competing with China, not for exports, not for exporting, but at least for protecting our country's production and restricting imports from China, the government has been fairly successful, and in the next few months maybe will be even more successful. So when you look at the overall picture of the economy, a lot of changes have taken place, lot of fundamental basic changes have taken place, which will change the face of the economy now. So the next phase of the market, which I can envision, is going to be unbelievable, because if I talk numbers, I mean not I don't think anyone can predict anything about the market. But that is one thing I am very sure, that we will see unprecedented growth. We will see growth which was the kind of growth that we have never experienced earlier. And not only in absolute numbers, but relatively also. I mean, okay, during the 2003 to 2008, Nifty moved up from maybe 800 to 7 times. So it's about 5,500. So 7 times. Now Nifty moving up 7 times from 16,000 looks very difficult, 1,12,000. But you never know. Maybe not in 5 years, maybe in 10 years. It can happen. Because market always has been moving cyclically, and India now during 1950s, if I can give an example. The World War II ended in 1945, and by 1950, US economy was back on its rails. And 1950 to 1960 is the decade which has given the highest returns to US stock investors uh, in history, right from 1776 when they got independence. So 40 વર્ષમાં, in that 240 years, that was the only decade which has given the highest returns. So when you come out of a pandemic, when you come out of a major problem, like we are coming out of COVID, the World War was a similar but a little longer problem then. We have wasted 1.5 years, they wasted 6 years. But that was a growing economy, and they could reap benefits during those 10 years of 50 to 60. Now, same thing I can envision now for the Indian economy over the next 10 years. Because we are on a takeoff stage, we have got huge demand, everything. I mean, we know, we have been discussing, everyone on television is talking about all this, so I'll not repeat that. But this is something which I have learned from experience, that this kind of growth only comes once in a lifetime, and if I am not mistaken, this growth is going to be, that phase is coming now. And in the next 5 to 10 years, we'll see the unbelievable growth and unparalleled growth, which will lead to better life for every one of us. And I hope we do all do well, and I'm sure you are all investors in the capital market, because otherwise you would not be here. And I'm sure there are a lot of other things which we would like to discuss. So I'll leave some time for Umesh Bhai, and then in the end, 15-20 minutes, we'll discuss with you also, and internally also, whatever issues we think we can put more light on. Thank you. Thank you.
Good afternoon, everyone. Honorable President of ICSI Nagendra Rao, Vice President Sri Devendra Deshpande, my good friend and the Chairman of Financial Service Committee, the Central Council member, Mr. Narsimhan, Chetan Patel, Council member, Bhavya Gaudana, and the team of Ahmedabad chapter of ICSI, and dear friends. It is indeed a matter of pleasure being over here in the session of capital market do's and don'ts for investors and the growth and opportunities in the capital market. Friends, I thank the Institute for giving me this opportunity to share my thoughts. We have seen Yamal Bhai saying that it would be the decade, it is once in a lifetime growth in the next decade. Probably the Sensex would be 500 plus tomorrow with this statement. Sir, I wish that tomorrow the Sensex may give 500 plus. Today it was some 350 point minus. But this statement is surely going to make an impact on the capital market. Friends, those who don't know, Yamal Bhai, as he has said, he is into the capital market for 40 years. But I happen to know him for more than 25 years. He is a veteran. While in one of the sessions we were together, he simply said that, okay, whatsoever you can see, simply buy that stock. And at that time, he had given the example of Pantaloons. At that time, Reliance was not there. Neither this Future Group was there. Pantaloon had started the shops at that time. We were together somewhere in 2008. And he said that look, whatsoever is convincing. He told about the say watermelon wala. Now, whatsoever you can see, and people are mad on Bitcoin. I don't know what would be the future of Bitcoin. There is no assets, underlying assets behind it. If somebody busts it out, whatsoever, whoever, whatsoever is going to get, I don't know. So whatsoever you can see, whatsoever you can feel, whatsoever you can touch is the only things what you should buy it out. So friends, before I go to the investor's point of view, Keyur Bhai, while saying about the role of company secretary into the capital market, I also personally feel that the company secretaries have a vast opportunity in the capital market in the various types of roles. So there are some 7,500 plus companies which are listed, and there are some 60,000 plus company secretaries. There is a mismatch. There is a huge supply of company secretaries vis-a-vis the number of listed companies are concerned. And everyone feels that where is the role of a company secretary in a listed company. But in the big groups, there are various subsidiaries, various companies which are directly or indirectly, whether it is into the forward integration, backward integration of that group, or the say ancillary around across that company or the factory, there is a role for a company secretary. The institute into the last decade, probably since 1992, when the SEBI Act came into existence, prior to that it was controller of capital issues, institute is striving hard to get the recognitions for the members from the statutory body, statutory authorities, say amalgamation, restructuring, LODR, SEBI CEST regulations, adjudication proceedings at SEBI, appearance before Securities Appellate Tribunal, ICDR, due diligence, Securities Contract Regulation Act, SEBI Act, internal audit of intermediaries, say whether it is a depository or the merchant bankers, internal SME exchange, raising funds from international markets, SEBI insider trading regulations. These are the various opportunities which are available to the company secretary as a whole. Company secretary has been authorized to verify the compliances and issue certificates and reports to the companies which are listed. And into today's scenario, even the company is a private company or a closely held company, and it has come out with some debentures or bonds which are listed on the stock exchange. The compliance of listed companies are required, which a company secretary can efficiently, none other professional than a company secretary can do it. Company secretaries are also advising the companies in preparations for the listing sort of things. Jamal Bhai talked about some new technology company. Yesterday only I had a client at my place. Sir, he has the capital of 76,000 rupees only, 7,600 shares. He has invested only 17 to 20 lakhs rupees into the company. And he says that I want to dilute the shareholding into my company. Man, how much you want to dilute? So some 15-20%. So it comes to 1,500 shares. And what is the valuation is expecting for these 1,500 shares is 7.5 crores rupees. I was absolutely shocked. He is expecting, I told him that you first increase your capital to at least 50 lakhs rupees or 1 crore rupee, then we can talk of 5-7 lakhs rupees, wherein your capital at least some 10-20 lakhs of shares, then we can talk about it. But this is the valuation they think that they should get it. Why? Because they are into a technology company and it will turn the world down. But also 360-degree change would come into the world. That is what they feel. And this is the valuation. So these are all the things which are coming on into the mind of the people. This is a new age. We have to take the advantage of this new age. And I compliment the Institute of Company Secretaries of India for coming out with such an idea and to organize the program on capital market. Friends, to start with now, the stock market, this is all about what the role of a company secretary is. But now, to start with, as to what the capital market is, what as an investor a person should do, what is the growth and opportunities, I would like to touch upon the issues which are concerning the company secretaries as an investor. Basically, if you see the stock market, there are two fools in the stock market. One feels that the market will go down, the other feels that market will go up, and hence they are entering into the transaction at the floor of stock exchange. There are other exceptional circumstances also. If he has bought some other property, he also feels that the market will go up. He also feels that his stock will go up. But usually the traders, they feel that it is enough. Now my profit is enough. And incidentally, one fool proves to be right. That is how the stock market is moving on. And into the stock market, it is being said that fool will make money and the more intelligent will lose the money because he thinks too much. Whereas a fool doesn't think, he takes the decision and that's it. But an intelligent person, a thought-provoking person whom the thought process goes on, he keeps on thinking and loses the money. Whereas a fool who doesn't look back and takes the decision, he makes money. This is how the stock market functions. There is another characteristic in the stock market that no one will tell you as to what is the loss he has made. It may be into lakhs, it may be into crores. He might have been into a fix. He might have been required to go underground also, but he will never tell. But if he has made 1 lakh rupees of profit, he will tell to the entire society where he stays, he will tell entire group where he tells, and he will become a person who gives the tips to the other people. These tips also, it is very unfortunate that the buying decisions usually takes place into our market. Now the people have become more intelligent, but investment decisions are taken either on phone, now on WhatsApp chats, or it may be, say, at a pan shop or a coffee shop, or it may be at a marriage function, and people don't even leave the place of funeral. If they are gone to funeral, the cremation is being going on, and in the corner they will ask, "Su lewa jevu lage છે?" Are bhai, Bhagwannu naam le, you are standing into the cremation house, you take the name of the God, that is the best thing, you should take it. But unfortunately, the decisions, the rupees, they plan. If they want to have a sandwich, if they want to have a milkshake, if they want to have a cold coffee, if they want to have a coffee, they will decide whether we will go to Starbucks or we will go to Barista or we will go to Cafe Coffee Day, and there is a thinking process going on. what is the seating arrangement available, how is the ambience, what are the prices. So for a cup of coffee of 150 bucks, they would spend half an hour to decide, but to buy a share worth 50,000 rupees, it would be taken. Udaya Kidujana, take it, it will go up. So this is how the people work upon. But this is an unfortunate part of our country as such, because the people are less disciplined. Discipline is required where it is the question of money or money's worth. If there is no discipline, then what will happen is that they will have to borrow when they can lend. They would always be in a borrowing state. They would always be, say, the liquidity crunch would be there. And they would always be stuffed with all the scripts, which is more than hundreds in numbers. And they would not be able to take the decision whether to sell it off, to keep it off, what to do. So ideally, these are all the things what is happening. Moreover, there is a difference between word called wealthy and rich. We earn. I had a friend of mine who used to tell that whatsoever we are earning is not our income. It is the capital what we are generating, and what we should spend on an extra expenses should be the income what we have generated out of this capital which we have raised by earning, whether it is a consultation fees, whether it is a salary. So that is what the concept for building the wealth. There may be many first generations person like me who has to put in money, who has to let go and has to sacrifice something for a better future. Once again, where is the better future? There are different school of thoughts going on. I read somewhere an article that it is said that satisfaction is better. It is said that you should be content, and that is the best sort of feelings. But at times that contentment becomes a sin, and you feel pitiable about yourself when you compare yourself. Contentment is good for 3-5 years. It is something like Smashan Vairagya, that yes, I am contented. But when you see a colleague, when you see a peer who moves into a Mercedes and you are moving into your old Swift Desire, and at that time you feel that contentment was not that okay, I should have tried it. And at time, contentment also relates to your laziness. If a person is lazy, he gives its name as a contentment. I leave my office at 6 p.m. I don't want to rush you like people like you who work till 9:30 in the office. But because they are lazy, they don't want to work hard, that may be one of the reasons that contentment looks attractive to people. There has to be 3 parts of whatsoever you earn. Whatsoever the 1 rupee comes to you, according to me, one has to have 1/3 part each for spending, 1/3 part for getting the possessions, whether it is a fridge, TV, car, vehicles, ornaments, and 1/3 has to be for saving. If this fundamental is being approached, a good wealth can be built over a period of time. To start with, how you start with, the basic funda you have to decide whether a person is a speculator, trader, or an investor. If it is a speculator, what happens unfortunately is we buy for trading, the price doesn't go up, and we become a long-time investor. That is what unfortunately happens. So we had bought some share, Kale Savarna BTST, buy today, sell tomorrow. At 3:25 p.m., we buy 100 shares of Reliance at 2,200 rupees. We think it tomorrow it would be 20 to 50. I will sell it off. Buy today, sell tomorrow. Reliance opens at 2190. We are unable to book the loss of 10 rupees, and we hold till the Reliance goes to 1800, and then we sell it out of despair. This doesn't work, and we sell it after becoming long term. And once you sell, it is always happens with an investor. Once you sell at 1890, it will go to 2500. So this is what happens when you buy it, the price goes down. When you sell it, the price goes up. It is with everyone, and everyone feels so. Something like mobile and the marriage is what happens. If I would have waited, I would have got a better deal. But it doesn't happen into the life. You have to be content with the profits. You have to decide as to what is your goal, what is the price of a particular share, and what is the value of a particular share. Well, I remember a particular script, Yamal Bhai. It was Happiest Mind. And since it was from the bosses of the Mindtree promoters, I think Ashok Sutta is the promoter, he bought out this IPO at the age of 76 years. See, we talk about the contentment. I have one client right now who has applied for a resolution plan in one of the company. He is born on 12th October 1947. Sir, 74 years of age. He has given an application for revival of a Sikh company under CIRP. This is the level of commitment and the level of zeal the people have to work. And only with Ashok Sutta at the helm of the affair, I was very bullish and I started collecting the shares at 380 rupees. Today it is 1500 rupees plus is less than 10 months and a very fundamentally sound. And day before yesterday, it came into the newspapers that the shareholders, 150,000 shareholders has increased into this script since its IPO. So this is the retail interest what it has created amongst the general public. So you have to decide whether you are a speculator, whether you are an investor, or you are a trader. A person can have three kinds of portfolio also into his own portfolio. That if I deal into my name, it is an investor. If I deal in my wife's name, it is a speculation. And if I deal in my son's name, it is a trader. I would sell it within period of less than 3 months. So that is how you can divide the portfolio also. Once you buy the shares, you have also to decide as to what is the return you desire. People at time, it happens like Abhimanyu, he knew how to go inside, but he didn't know how to come outside. And this is basically what happens with the person who is into the capital market. They know when to buy, but the more crucial decision is when to sell and how to sell. So you have to have some fixed percentage of returns, what you would like to have it. Whether you would like contented with 20% return if more than the interest income is coming to you. Whether you would like to have an exempted long-term gain, so you should have hold it for more than 1 year. Or whether you are a trader and would switch on, will take the profit out of the table and keep the capital inside, or you will take the capital out of it and let the profit be deployed to increase it to n percentage of times, then you don't sell it. I remember I have a friend who had bought Infosys at some 300 rupees plus. He had got 1:1 bonus and he is still holding that shares. I know one investor who is holding Asian Paint since 1985 or 1988 and it has multiplied n number of times, sir. It is the portfolio has gone to 4-5 crores. He has not sold a single share out of it. So to hold the shares is a big deal. And when do you hold the shares? At time what happens, we get tempted. And what we do is we buy gold, purchase silver, we sell silver, buy copper, we sell copper, buy steel, we sell steel and buy plastic. This is what happens into the cycle of churning of portfolio. And at times it becomes very costly affair. So better thing is, if you are holding the gold, hold it for long, because there are very few good scripts available into the market. At times we feel that the price has increased considerably. If you compare the price of March 2020 and if you compare the prices of the stock as on today, it has given almost every script has given 100% plus returns. But it happens once in a while. It doesn't happen on a regular basis. That unprecedented gains whatsoever we have got, we can't keep it targeting that we will get unprecedented gains at every time. So before investing, before starting an investment, there are 6 steps a person should put 6 questions a person should keep in front of him. Where am I? Where do I stand? Am I a novice? Have I started my career first? Am I having the responsibility of the family? What is my social status? Am I yet to get married? I am married. If married, I have children. If I have children, are the schools begun? Have the studies begun? If the studies have begun, where would be their higher education going on? So where do I want to reach? Where I am and where I want to reach. By when do I want to reach that place? Whether I have a duration of 3 years, whether I have duration of 10 years, whether I have duration of 15 years. What is the goal amount? It is always better, friends, I would tell, that to have an advice of a financial consultant who is certified financial consultant and not like me, who happens to simply be an investor and guides the people as such. A certified financial advisor, a person like Yamal Bhai, a person like Tejas Shukla, who are over here, who are into this field of investing and financial planning for decades together. So what is the goal amount? At times what we don't know is what is enough. I had done my exercise couple of years back with the help of Tejas Shukla as to what is enough. At times what happens is that because of the scarcity, because of the undecided situation, or say we cannot assume as to what the situation would be down the line. Say in COVID, the mental state of affairs of many of the people in the society has changed considerably. Somebody has got vairagya, somebody has become miser, somebody has become cautious. So the mindset, the trend of the people have changed. So what is important is to know what is enough. If you happen to know what is enough, because there is no provision into the act. I read somewhere that it is better to be miser only if you have an afterlife. So it is no use to become a miser, neither to become very cautious, but simultaneously you should be aware as to what is the enough for your retirement life. I was reading somewhere that now the expected age of an Indian has increased by 3 or 4 years. Formerly it was 73 years, it has increased to 76 years. So we would be required, our post-retirement life would be more vis-a-vis compared to 10 years back. So whatsoever our parents might have planned for themselves, that might not work for us, and we would require to put more money for our retirement purpose. So what is the goal amount? How much can I invest? It should not happen that you go on investing into such a fashion that you are unable to meet the regular expenses. Don't over-invest also. What is to be invested? How much can I invest is very crucial. Otherwise, the social life also will get disturbed. Gujarati ma kehte bairu kadhi muke. So that was also not enough. We have to see how much what we can invest. What is the risk appetite? Whether I can take risk, I have a responsibility of 4 people to feed at my house, or my father is still there and he is feeding my family also, so I can take a risk. If I have a brother, we have a joint family, one person can take a risk and rest of the people can be conservative. But if you are the only earning member, then the risk appetite obviously has to be less. And combination of the funds available and what are the facilities available. These are some of the things before you should start. Certain things to be avoided. Number one is the comparison. Somebody, because it is into the, it is being said into the capital market. I don't know you are aware or not, but when the people at the pan shop, when the people at Pani Puri Lari, and when the people of the tea stall starts telling, कि साहब ये ले लो ये बढ़ेगा, बोले कौन बोल के गया? तो कि आगे एक साहब आए थे ना, वो लोग बात कर रहे थे कि ये चलेगा. When this trend comes, you have to believe that now the bear market will start. Because that is the indication that everyone is talking, even that sabji wala will tell કે સાહેબ શું લેવા જેવું લાગે? અરે ભાઈ ભગવાનનું નામ લેને યાર. You see, if sabji wala, if I ask you what I should buy it out, that means that the people have gone to that level. It is the drugs which has gone to that people. Now at the downside, it is the time to come out of the stock market, take a back seat and wait for the corrections to happen. Never compare yourselves. What happens is that ladies whether it is in the family, whether it is in the society, will tell, आपके भैया तो इतना कमाए, हमको तो इस स्क्रिप्ट में लाखों हो गए, and that will come to your house. That वो कमा गए, हम रह गए, आप में तो बुद्धि नहीं है, वो देखो कितना कमा गए, वो गाड़ी लेके आ गए. Now you never know that he has taken a loan and you are staying into your own flat and he is staying in a rented flat. You are staying in a flat which is owned and which is costing 2.5 crores rupees, and he is staying in the flat at the rent of 25,000 rupees, which is not known to you. So never compare. The price and value of shares has to be determined. Some absurd price of there are various things going on now. It is into the public domain also as to what should be the right price of Zomato. Somebody tweeted that it should be 41. Harsh Goenka was very optimistic. He said that I will give 30% discount and will come out with an IPO. If you feel that loss is less, I will give 60% discount. That is what he said about. Now, if we take about all these things gone into the market, what is the price and what is the value? People were talking so about Amazon or Apple or Coca-Cola. If you see in the past 20 years, the people were talking so. It is only the time which will tell. But till you are convinced yourself that this is a good business model, it will generate money for years put together, then and then only a person should go for a particular script. You should not be rather greedy about it. There are greed index. There is a greed index. I always tell that there are 3 questions when you feel greedy about something. If you go into a supermarket and if you think that I should buy this t-shirt, there are 3 questions to be asked. Can I afford it? That is number 1. Number 2 is, do I really need it? Whether it is a need or whether it is an additional cost what I'm getting, that is the second question. And the third question is, if I have it, will it give me peace of mind? Whether it will give me a sound sleep. So these are the 3 questions which can be applied before buying a stock also. Somebody says that buy Indian Bank, somebody says buy Bank of Baroda. Now you should feel it whether you are holding a State Bank of India or whether you are holding a Kotak Mahindra Bank, you should buy ICICI Bank or an Indian Bank or a Bank of Baroda. Which of it, if the banking sector is going to perform, all the banks are going to perform. If there are some black sheep, the accounts are there. See, formerly Punjab National Bank had some black sheep accounts wherein it had incurred the losses and it has to book the losses. Then you shift out of PNB and buy SBI. If there are black sheeps in SBI, you buy, sell SBI, buy BOB. Now with all these mergers going on, you have to find out as to which script you would like to buy it out. Whether you would really buy it out or is it okay? It hardly makes difference. Friends, try it out. If you are having a portfolio, sell some share into the market today and see, do you really see the prices the next day? आज क्या हुआ, दूसरे दिन क्या हुआ, तीसरे दिन क्या हुआ? I never see. If I have sold that shares, if I have exited a particular share from my portfolio, I never see the price tomorrow or day after or even after 15 days. Once sold, it is sold. Unless and until there are some other positive news into that particular share, if it has got some order, or it has got some extra exports being made, it has opened up some new factory, added some additional capacities, then and then only I will compare the price on which I had sold, what were the financials then and what are the financials today and what are the price today, then and then only I will buy it. So this is the greed index. It has to be a planned investments suitable to our attitude. Don't trust, don't do business. Friends, I always say that if you don't trust someone, we have got married because we trust our wife. We maintain the relationship with wife because we trust her. So trust is the fundamental of anything. If you don't trust, don't do business. So I don't trust Bitcoin. I never ask as to how it can be done, where it can be done, who is the broker. I never inquire. So if you don't trust the business, there are many businesses. Now, after this Zomato issue, there are the clips of Jaspal Bhatti being circulated into the market, which was almost 15 years back, where he said that he will bring an IPO of a Golgappa Wala. That is a clip what is being circulated into the WhatsApp. Now he had envisaged this thing 15 years back, which is becoming a reality today. So if you don't trust the business, I'm not saying as to what the price of Zomato is today, because I don't trust that business model. So if you don't trust, don't do business. It is never late to start. Somebody say that I'm already 50, I have never purchased one share. अब कहाँ बोले डीमैट अकाउंट खुलाएंगे, अब कहाँ समझेंगे, but it is never late. Once you start investing, it is never late. Yes, it is being said that if you start saving young, you will build a good career as such. Say if you start young, you will have a good surplus at the retirement age. People say that how much money is required. There is something called financial freedom. There is a fundamental called financial freedom. If I am earning say 1 lakh rupees per month, so my income comes to 12 lakh rupees per annum. And what is required, if a rate of 10%, if I want to 12 lakhs, I will require a capital of 1 crore 20 lakh rupees, so that I at the rate of 10%, I will have 12 lakhs rupees per annum. So this is what the financial freedom says about. But that is the current income. What about the retirement? There are Excel templates available. There are experts into the market who will guide you as to what is the amount you would require till the time of retirement, so that you don't have to work today. It is always said that people do timing. काले लो के परम दिवसे लो. I buy tomorrow or I buy day after. Buy whenever you get the first chance to buy it out. Then they will, even if there is an upper circuit, they will buy it. Even if it is lower circuit, they will put that into the line to sell it. The timings are never there into the stock market. Had there been the timing, there are 6 things, friends, that God has not given to the human being. It is credit and discredit. It is joy and sorrow, and it is life and death.